Hey everyone, thanks for getting on the Connect podcast, where we talk about financial planning and all those different strategies. Today I have two very exciting guests, Scott McPeak and Brent Hughes, to talk about insurance and protection and annuities and lifetime income. So thanks guys for being on.
Yeah,
Thanks for
glad to
having
be
us.
here.
Great, great. So can you talk about the different kinds of life insurance that that's out there and people are thinking about for their families?
Sure. Well, first of all, thank you very much for having us here today. And for those who don't know, my name is Scott McPeak, and I work for Crump Life Insurance Services, and we are an actual broker between that helps out actually financial advisors and agents how to help select the proper life insurance products for their clients' needs at that time. When it comes to life insurance, there's really five main types of life insurance. There's term insurance, universal life insurance, index universal life insurance, variable life insurance, and also whole life insurance. I think just getting some feedback from individual advisors, I think the most common type that people are aware of is going to be whole life insurance. It's been around the longest. It had a lot of advertising when it first came out in the marketplace, and people are just very used to when they talk about like need for insurance, they always ask for whole life insurance. The thing is, there's nothing wrong with whole life insurance, but there are other options out there that are really tailored to suit kind of their individual needs. The number one, I think that is, I would say the most common type that is used today is term insurance. And that is a very, very simple insurance. We see it a lot of times with clients that would just like a little bit inexpensive version of permanent insurance, but the term insurance only runs certain durations. So as long as you pay your premiums, the policy will still be in force up until that certain duration, whether it's 10 years, 20 years, or 30 years at that point. After that, the policy will actually go away at that point. So, like I said, there's so many variations of individual life insurance that really play into a client's, especially from financial planning as a financial planning tool, where it really is more just than life insurance. That if something happens to you and you pass away, the benefit will go to your beneficiaries at that point. There are different kinds of strategies out there with, I know, with universal life and index universal life. Actually a part of your premium does go to pay for the individual insurance, but also goes to help build up some cash value, the possibility of building up cash value down the road. And in variable, there is a possibility that obviously your money can go up, but it also can go down as well. So loss is definitely a chance there for the client. So when people would come to me when I was doing kind of personal production a little while back, a couple of years back, it really varied on what kind of insurance the clients needed. Some needed more permanent insurance, and some needed term insurance for a shorter duration. Especially younger families, I think term insurance can be a good option for them, especially when they're starting out. It's usually the least expensive kind of insurance. And then when they get down the road, that's when we started to see more kind of permanent policies out there. So again, to kind of sum up, it really comes into play where we really fit here at Crump Life Insurance Services. We fit the correct policy to the client's needs and what they need at that time.
That's great. Yeah, thank you so much. It seems like there's a lot to life insurance, as well as annuities. We'll get into that in a little bit. But can you discuss some of the trends that are coming out in life insurance? For example, like the long-term care riders are a big thing. And I came from a place where we were told that term is always better than perm, and buy term and invest the difference. I don't really agree with that anymore because of all these different things that can happen with benefits of life insurance. So, can you talk about some of the riders?
Sure. With all life insurance, it varies by company. We work with a number of insurance companies, ones that clients have probably heard of before. Very, very large companies that have a long history in the marketplace. And each company actually offers, for an additional cost, individual riders that you can add on to an actual policy. There's riders for terminal illness, accidental death. There's also riders like you had mentioned for long-term care, which is actually very, very popular at this time. We have so many people out there that are retiring each year, and we know that people are living longer and longer and longer. And the need for some kind of long-term care can be very expensive for clients. And adding one of these long-term care riders for an additional cost, obviously, The client gives the client the ability where if they kind of meet the definition of being chronically ill, they can actually take out a portion of their actual death benefit to help pay for long-term care costs down the road. So it is an added benefit of life insurance that really gives the client kind of almost like a Swiss Army knife approach, with just having the individual insurance, but also being able to use some part of that benefit for long-term care if they do need it.
Great, thanks. Appreciate that. Now let's turn to you, Brent. Can you talk about annuities and what they're for and how people can utilize them and annuities have gotten a bad rap. Um, they can be oversold, but they are definitely a very important part of a person's financial plan. It's just like a pension, it's just like Social Security. Those are types of annuities. So can you talk about kind of what an annuity is and how they work?
Sure, sure. And I'll introduce myself real quick. I have been with Crump for 20 years. Previous to that, I was a registered rep for 10 years. But what I specialize in is helping advisors find the correct product for their clients on the annuity side. And annuities are basically purchased for one of three reasons. And it's for retirement growth or for income in retirement, or if they are uninsurable, they can't get life insurance. We do have annuities that have enhanced death benefits. So those are the three main reasons why a client would want to consider an annuity is they want to put money away for retirement, they want to make sure they have income in retirement, or they want to pass something on to their heirs. And we specialize here at Crump with fixed annuities that just have guaranteed rates. You can compare them to like a CD. It'll have a fixed rate for a fixed number of years. We also have indexed annuities where returns are linked to an index, but it has downside protection. So you don't have to worry about losses when that index is down. And then there are also variable annuities. Now, we don't work with the variable annuities. You'd work directly with your financial advisor on those. But we do the fixed and the fixed index. And that's kind of our focus. Recently, we've seen a big uptake in rates. And by I mean rates, one of the measurements that we use is the 10-year treasury. A lot of carriers use treasuries to back their general accounts. So if you see the 10-year treasury going up, chances are annuity rates will start to increase. And so the fixed rates, the indexed rates with the income riders. And if you look back historically, we've had about 15, 17 years where rates have been at low points, sometimes below 2% on the treasury. Today, the Treasury is around 4.4. It's the highest that it's been, and well, one of the high points where it's been in the last 15 years. And so the products that we offer for clients, they're at a good spot right now where they're very competitive.
Yeah, absolutely. And you're referring to this high interest rate environment, right? So
Correct.
um, definitely a lot of what I've been telling a lot of my clients is, let's take advantage of these high interest rates while we have them. And it's kind of interesting, to boil this down. What you guys do is, what we do is we make sure clients are protected in case they die too soon or they live too long. Die too soon on the insurance side, live too long on the annuity side. But talking more about annuities, can you talk about the different kinds of, fixed annuities and index annuities and variable?
Sure, sure. So, the fixed annuities, they just have guaranteed rates for a certain amount of time. And then the indexed annuities, you can buy those for growth, where you have the possibility of a better rate, better protected if there's a downturn in the market. Of course, variable annuities are securities products. So if there is a loss in your sub accounts inside of variable annuities, you absorb that loss as well, but you also have the chance for higher increases. The way I look at it, it kind of boils down to two things. It boils down to your risk tolerance. So how comfortable are you with losses? Are you more of a person that wants guarantees? And generally, as we get closer to retirement, as we get older, our risk tolerance goes down. We've worked our whole lives to accumulate what we have, and we want to protect it. The second part of that is time horizon. So, if you are in the market, you need enough time horizon to recover from a market downturn. So people who are nearing retirement or in retirement, they don't want to see those losses. They may not be comfortable with, seeing the markets go down, or they may not have enough time for it to recover. And so that's kind of where we specialize. We help those clients that have low risk, short time horizons that need more guarantees on the growth of their money.
Awesome, very cool. And what kind of trends are you seeing in the market today with annuities? And can you talk about long-term care riders on annuities as well? Some of those have been pretty popular. Would love your take on those.
And so, where we're seeing a lot of activity, annuities were designed originally to, for protected growth, but also to give income. So there's only three places where you can get lifetime income. We all know Social Security, and we all have our opinions and thoughts on Social Security and where it's going and will it be there.
Yeah,
But at the end of the day, it does give those people in retirement a source of income that lasts their lifetime, and also for their spouses. The other place is pension plans. Now, we don't see a lot of pension plans anymore. A lot of companies have moved away from pension plans because of the cost, and they want the employee to participate in their retirement. So instead of them funding the full pension plan with a 401k, they do a match. And so the employee puts money in, the company puts money in. And so things have changed. We don't have as many pension plans. With an annuity, you can create your own personal pension plan. So you can fund it over your lifetime, or you can do a lump sum into it. Maybe you take a portion of your 401k and put it into an annuity, and you can turn that into lifetime income. And it can be lifetime income on just yourself or on you and your spouse. You can have it to where it's a level payment or an increasing payment. Now, of course, if it's increasing, payments will start out lower, but they'll go up based off either an index return or a cost of living adjustment. Um, and then the other thing that you also have is some of the contracts now have what they call an enhanced income on it, where if the client, goes into a nursing home, hospital facility for an extended period of time, or if they can't do 2 of 6 activities of daily living, they'll actually double those income payments for a period of time, usually up to 5 years, and then it goes back down to their regular payment that they've had from the start. So there's a lot of flexibility, but the income portion of it is where we're seeing the most activity. Income payouts are at a high point, one of the highest points we've seen. So, there's never been a better time to purchase income. You get more for your money now as far as an income payment than we've seen in the last 10 to 15 years.
absolutely. Yeah, now is a great time to look at refinancing old annuities or, starting a new annuity, starting a new lifetime income stream. That's one of the most important things to an annuity, in my opinion, in my strategy is make sure that my clients have a lifetime income stream that's guaranteed and durable for the rest of their lives. Turning back,
Andrew,
go
if I
ahead.
wouldn't mind
Yeah,
just
go
bringing in
ahead.
something in here. Yeah, you mentioned about, I think Brent mentioned about looking, you did about re-looking at the older annuities out there in the marketplace. The same thing goes for life insurance and policy reviews, I think, is a very valuable tool out there. The marketplace has changed and grown so much, over the last 10 or 15 years, where someone may have a good policy that they bought, 20, 30 years ago, but their needs may have changed at this point. And it's a perfect thing to take a look at those old policies and find out what exactly does the client have. And I think a lot of times we may be able to improve their overall position when their needs have changed now.
Yeah, I
Yeah,
think that really plays into working with your financial advisor. You should be having regular meetings with them, once a year where you look at everything that's going on in your life, especially as you're nearing retirement. Um, but yeah, it's always good to go back and look at the things that you already have and plan for the future, and your financial advisor plays a key role in that.
Yeah, and as Scott was saying, especially if that advisor's initials are AC, you should definitely work with those guys. So yeah, that's great. And talking about annuities, 20, 30 years of refinancing, I'm finding that even uh, more recent annuities, even 2019, 2020, there's still a lot of, a lot of changes that happened recently. And some of these will have, surrender charges. So make sure that you are dealing with a professional. But there are times where it's actually advantageous to take the surrender and get more income in these interest rate environments. Again, talk to your financial advisor. But yeah, that's what we're seeing a lot as well.
Yeah, if I
Um,
can just jump in
yeah,
there real quick, Andrew, we always want to make sure whatever we do that it's better for the client.
yes, yeah,
And so, when we are looking at policies, a lot of times we'll say this policy is still the best thing for you. Don't give it up.
yeah.
Or there may be other times when we say, this is a great policy, but we found something that may be better for you. Here are the different things you need to consider. And that's where your advisor can help out with that. But we always want to make sure whatever we do that we are making things better for the client, that they're getting higher income, better benefits, uh, versus the contract they may already own. So we take that very seriously. We call it suitability in our industry, but I just call it taking care of the client.
Yeah.
We just want to make sure that we're doing the very best for our clients. And for years, my clients were family and friends and people that became friends once I met them. And so we take that very seriously, that we want to make sure that we're always making the situation better for the client, and that they will be financially better off by what we do.
And Brent, I couldn't agree more on that. I mean, when we get a lot of these, policy reviews that come into us from financial advisors, we always do take a look and we will provide solutions, but it does not necessarily mean it's going to work all the time. But at least, I think it's very important to look at a life insurance policy every year to do a policy review on it, just to make sure that the policy is still performing exactly as the client wanted to, and to see if their needs have changed though. I think that's really the most important thing.
Yeah, you get a lot of, it's important to have a fiduciary advisor that works within your best interest, because what we've seen is a lot of yahoos out there that will, sell anything, do anything to make a sale, say anything to make a sale in this industry, and it's giving a lot of advisors a bad name. And, going back to you, Scott, on life insurance, that one of these things that people say is like be your own bank with the cash value insurance, and it's a lot of marketing gimmicks out there that people are trying to use. Obviously, we take a more comprehensive approach, but there is something to say for cash value policies. Can you talk about when it's advantageous to look at a cash value policy? I know there's tax optimization. It's been called the rich man's Roth. It's one of those last buckets you want to fill, but it can create tax free income for someone. So can you talk about that, as well as, child policies, if you think those are beneficial to clients? What should they be looking at? What are some of the market trends with cash value policies?
Sure. Well, yeah, definitely. We do put together a lot of those scenarios, and kind of like you had mentioned, it can be in certain circumstances, depending obviously on the client, utilized as a financial plan along with other investments that you would provide and options you would provide. When it comes to cash value life insurance, there is a component of the way life insurance is funded. When a client were to pay their premium, a part of the premium will go to pay for the life insurance itself, but another portion would actually go into an account where it does have the potential to grow or actually lose money in certain individual policies. Over time, if the client obviously is paying their premiums, that cash value has the possibility of actually growing over time. With that being said, they do have the ability to take out what's known as a tax-free loan of the policy. Um, However, with that, but that's really something getting to that area where it would come into you as a financial advisor to kind of advise, because it doesn't work all the time in certain circumstances. It can work, and it's really something that needs to, to be reviewed with the financial advisor and also the client as well. But there are opportunities out there for a client to take out a tax-free loan. So it does have the potential for that, and we do see that as a trend alongside their other investments that they already have.
Absolutely. Yeah. Yeah. That's great. Any last tips you guys have out there in terms of life insurance, annuities, what people should be thinking about, what clients should be considering when buying or reviewing their policies?
Maybe I can go first if that's all right, Scott.
Sure.
So, a scenario that we see on a regular basis is clients that are retiring or getting close to retirement. We spend our whole lives building up our 401ks and our investments. And then one day we quit our employment and we have this big nest egg, but the thing that we're used to is a paycheck. So how do we turn that nest egg into a paycheck? And how do we make sure that that paycheck is going to last for our lifetime? And so that's where annuities can really come into play. People that are nearing retirement, maybe they're 60 and they're going to retire at 65. We have contracts where you put the money in, it has a guaranteed growth rate. Now, when I say guaranteed, based on the claims paying ability of the insured, but a growth rate on that income value. And we can actually show today what their income will be at a future date. Or they may be right at retirement, and they may be doing planning with their financial planner. uh, one of the strategies you could use is, let's make sure that your basic needs are covered, that no matter what happens with your investments or what happens in the world, you have a paycheck coming in that's going to keep the lights on, keep food on the table, keep your car going, and allow you to do some of those fun things that you want to do in retirement. And then the remainder, we can continue to invest and grow, or do what we want with that to keep it growing. Um, but that's a very popular strategy, is to make sure the basics are covered with some sort of lifetime income. And that can be based on, single life or on joint life between a husband and a wife, so that when one spouse passes away, those payments continue for the second spouse. And so that's where we see a lot of activity, that people that are nearing retirement are ready to retire, and they just want to make sure that they have the income they need for that comfortable retirement they're looking for.
And on the life insurance side, thanks, Brent. On the life insurance side, I would say just the protection aspect of life insurance and what it can offer. If you kind of take a quick example of a young couple, maybe they have a child. Um, Having insurance, or having the insurance discussion at a young age, I think is very important, especially if you have, both spouses are working, they have a child. You just have to take a look at and have the conversation and think to yourself, what happens if one of the spouses passes away? What happens, are we going to still be able to live the same kind of lifestyle that we do now as if we did when we had kind of, let's say, a dual income coming in? I think, life insurance can help ease that burden if something were to happen to one of the spouses. And I just think it's a very good consideration to have that conversation with younger clients today and kind of going forward down the road.
Absolutely. Yeah. Love that. Love that. As a guy with two kids and another on the way, I can definitely I mean, it's so important to have life
It
insurance
is.
at this stage of life. So, well, thanks, guys. That was great, and thank you everyone for watching the Connected podcast. And I hope this was valuable to everyone. Thank you guys for your time. I know you guys are very
Thank you.
busy, so thanks.
We
All right,
appreciate it.
thanks,
Thank you.
Andrew.